Well, greetings, my beloved clients and friends. We wanted to do a market review and outlook, kind of a mid-year. So, this year we've been saying that from the very beginning that it looked like it was going to be a challenging year, 2022, and it definitely has. We figured it was going to be challenging, but to be honest, it's been more challenging than we expected. We've kind of gotten more conservative. We've raised more cash. We've gotten more defensive, and even with that, we've still been taking hits. And so, in hindsight, maybe we didn't become more conservative or defensive enough. And so it's more than 6 months into this pullback, and when can we expect a turnaround, or what could be the catalyst for that? And I would say there's three things that we could see that would be a catalyst. One would be, we've talked about this before, is the price of oil. If we get through the summer without oil spiking, that'll go a long way towards containing inflation. That's a big if. That's not a for sure thing, right? Early in June, it was up to like $123 a barrel. Then it dropped back down to like 104 or so, 103, and now it's back up around 110. So we don't like when it goes up. But if we could see it stay or even drop a little, that would be very good. That would be a good sign. Second one, and it's kind of tied to that, is then Powell wouldn't have to raise rates so high. And so there's a lot of fear and a lot of pessimism and a lot of expectation that rates are going to be at 3.4 by the end of the year. That's the overnight Fed funds rate. It's at 1.5 right now. So if it turns out that inflation has turned a corner and he doesn't have to go as high, well, then the market will probably respond favorably to that. But again, that's an if. And the third one would be if we see some kind of resolution on the war. In March, it seemed like they were, meeting and coming close to maybe a resolution, and then that fizzled out, and the market really went down from there. So those are three things we could look for. We're not for sure that we're going to get any one of those, and if it goes the other way, it could get worse. So we're just kind of hunkering down, trying to raise cash whenever we can, and not interested in doing too much buying. Even though a lot of things look cheap, but we've made that mistake earlier this year that we bought something that looked cheap and only to see it get cheaper. So we're holding off a little bit. Our tendency is more to raise cash when we can rather than deploy cash. That will change if we saw some kind of bottom. But the bigger picture, those are the temporary issues. Another one is kind of the supply chain, the tightness of that, and it seems like inventories are coming up. So while there were supply chain constraints and inventory was very tight, now inventory's filling up because these companies like Target and so forth they're finally getting stuff shipped to them, and the demand for that stuff wasn't as high as they had anticipated. So the inventories are building up. So in a way, that's a good thing. It's a downward pressure on inflation, which is what we're hoping for. So, but beyond that, well, one more thing. So we could see earnings in the coming quarters, when second quarter reports and third quarter, they might not come in as good as anticipated. So that could be another downward trend. So we'll see if earnings hold up this quarter. That could be really good. and we're probably a couple weeks away from earnings season kicking off. So those are things we're looking out for. But if earnings miss, some people are saying that that the markets analysts are not pessimistic enough about earnings. So we're just keeping an eye on that. But the big picture is, we're investing almost exclusively in U.S. companies, and when you invest in the stock market long term, it's really a bet on American exceptionalism continuing. Warren Buffett, he's always said that, throughout his career, he's bet on America. When he's had a 60-year career, and throughout that time, American exceptionalism has prevailed, and during difficult times, he stayed long, and because he understood that his investments were essentially long America and long American exceptionalism, and he expected that to continue. So the question is, do we expect American exceptionalism to continue? America is a place that attracts innovators, right? If like the song from New York, New York, it's this starry-eyed kid that wants to go to New York and make it big, and he has big dreams, and if he can make it there, he can make it anywhere. And that's the American spirit. And people from around the world for the last 200, 300 years have been coming to America that had that same glimmer in their eyes, that same American spirit that said, that's the place I want to go to make it big. And because the opportunity's there and not here. And that's been the case, and we hope it continues to be the case. And so, when those people knock on our door, we gotta let them in, even if they're from another country. Elon Musk is African American, but he came here because here was the place of opportunity, and here was the hotbed of innovation. And so if America continues to be that, there's hope long term. But that's not a given anymore. We're becoming very kind of restrictive on immigration across the board. We don't want to let the ones in that just want to come and suck on the government teat, but the ones with that glimmer in their eye, we want to let them in, regardless of where they're from. And throughout Warren Buffett's career, America has been, we have exported the American way of life. Like our big global brand ambassadors like Coca-Cola and McDonald's and Disney and Nike and Apple, Ford, that Boeing, Costco, Starbucks, right? That we're exporting America and American values and American lifestyle to the world. And my concern is that most of those companies I mentioned are a generation or two or three old, and where's the next one? And I think the next one is Tesla. That's one of that great American companies that's exporting American innovation to the world. But we need more of them. We need more of them. We need the millennials to step up and make the next Disney and Coca-Cola and McDonald's. And they are innovative. But it seems like we're busy bickering with ourselves and not realizing that the rest of the world is encroaching upon our territory. And we have been a big exporter, including of our music and our movies, right? Our movie stars and our rock stars, our musicians are global celebrities and even our athletes. And we want that to continue. We don't want to import music or movies or that kind of be a sign that, you know, what happened to American excellence. And you know, I walk into the mall and there's this K-pop store. It's like, how come? We don't want to ban them, but we want to beat them. You know, they could come to our market, but find that, you know, our music is better. Or look at companies like IKEA. They made their way in to America, and you know, why did our furniture makers let that happen? And Aldi, how is a foreign grocery store coming into our territory and we're not, and they're being competitive with ours? We should be concerned about that. Sarah, you know. So I mean, imagine you lived in a foreign country and you went to the movies and the longest lines were for the Star Wars movie or the Superman movie or the movie from America. And before the movies, maybe you stopped and got something to eat at McDonald's, and after the movies you went to Starbucks, and you looked down your feet and you noticed you were wearing Nikes, and you picked up your phone and it happened to be an Apple. And at some point you might say, hey, most of my money goes to America. That's awesome for America, right? And that's been the case, right? But what if we become that country? Before we know it, we're like, hey, I did my shopping at Aldi, and I went and bought clothes at Zara, and I bought my furniture at IKEA, driving my Toyota or my BMW on my Samsung phone, and everything I own is made in China. You're like, hey, my money's going someplace else. Could that signal that American exceptionalism has peaked? Right? And you know, our government needs to promote American exceptionalism. You know, one party's anti corporation and the other one's anti innovation, anti immigration. So, you know, we're busy bickering with ourselves, and you know, these foreign countries are coming, making a foothold. And in emerging markets, it seems like we might be missing the boat. China is growing and they're expanding and they're becoming, you know, the big brother, and not 1984 big brother, but like the influential, let's say, in emerging markets like Asia, Africa, Brazil. And Asia makes sense because they're close by, but Africa and Brazil, Latin America, why aren't we going out there and dominating those markets, those emerging markets, and taking our global ambassadors and having a big foothold in those? So we need to, for the bet on America to continue to be a winning bet, that needs to happen. So rich people want to send their kids to America to study at our universities, and that needs to continue to be the case. And that's what America's looked like, the place where innovation happens. So as long as America continues to be a global leader, and you know, our corporations are setting the pace, and we should be at the forefront of emerging technologies, whether it's 5G or AI or you know, the medical field, and in robotics, and advances in healthcare, and alternative energy. And we better stay in the lead. our competition isn't going to come from Europe or Russia. They're in the rearview mirror. So that's just, how we're thinking about investing and where we're placing our bets, and we're actually hedging our bets because we're seeing some areas of concern. But there's still some standouts in American industry. Tesla, for one. Although I believe they're going to have some challenges when they report for the second quarter. So we trimmed that position, but we're just trimming it to perhaps buy back cheaper. But long term, we absolutely love that company and what they're doing and the innovation they're providing, the growth. Right, our global ambassadors like Nike continues to take the way Americans dress and exporting it to the world. And Costco and Starbucks, those are big exporters. So we like that type of company. Netflix is a big global exporter of Americanism. And a lot of these companies are on sale. That's not to say they're not going to get cheaper, but long run they're in a good position. And we're kind of raising cash to wait to allocate those as we see prices get cheaper. Okay, so those type of global innovators and market leaders are going to continue to do well. But we got to make sure that we're keeping an eye on our competition and we're continuing to win. Otherwise, the market in general might be soft if we start letting our global competitors gain ground on us. Okay, so that's what we look for in a company. That's our kind of position in the markets right now, and we're thinking short term, and we're looking long term, and we're looking where to place our shots. We've talked about that before, and with an eye on the long term goal of long term capital growth and preservation, acknowledging that there will be some short term periods of volatility. I used the shooting analogy before. There's that rear sight post, the front sight post, and the target. And we don't want to look too much. We want to look through the rear sight post and keep our eye on the target. But really the clearest point is that middle sight post. And so long term, that target is retirement, that long term goal, or long term capital growth and appreciation. And the short term is that rear sight post is short term news and current events. And that middle sight post is roughly about 5 years out. So that's what we're keeping our focus on. And that'll help us navigate through this. Okay? Have a good day.